All right, folks, welcome to a Friday trade recap. On Friday, today's Saturday. Friday, we had a shorting opportunity, which we were correct, but we took a loss since we went to the 5-minute time frame for the advanced entry for the user profile 2. We took the trade and we got stopped out, but right when we hit our stop loss, it went to the downside, hitting our take profit, hitting our goal. So, yeah, that's the trade on Friday. Let's get over to it. And this a lot of lesson on Friday, but overall, I was bearish of the weekly time. For weekly time, for a weekly hour to weekly ERL, a weekly series to the downside, as well on daily time for the daily, we had a pop above a daily high. This will, from now on forward, I will change my ways of trading because this new way of trading will save me a lot of time. Right? Time is very important because I'll get in the chart sometimes for like 2 to 3 days, looking at the chart for no reason, and the market would just literally, I'll look at the chart for 4 to 8 hours, 4 hours every single day, and I see no setups. And eventually, I'm like, eventually that ruins my mood. Eventually, that makes it force a trade, which is not good, right? So my new way of trading is simply by waiting for a pop above a high or dump below an old low, depending on the draw and liquidity on the daily time frame. Then I'm looking for the lower time for execution. You can see the daily level in a bullish environment. If you can see, the daily levels are very smooth, right? Smooth, 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 right? And again, smooth, right? So like in bullish environment, the lows are very consistent, right? When they get souped, they're very consistent, they're very smooth, right? They don't get contested too often. In a bearish environment, high, boom, right? S&T, soup out the high, boom, soup out the high, boom, and then you can see, you did it again. But in the lower time frame, you have to see your entry then in order for you to execute that trade. But you can see, soup out the high. Eventually, that will be it for the bearish environment. But if we go back to lower time frame, even before that, soup out the low in a bullish environment, lows is very consistent. Boom, boom, very consistent here, right? Very consistent. Bearish environment. There was not here yet, but we go back in the chart in a bullish environment again. The lows are very consistent. Boom, bullish, consistent. Bearish environment. This case very consistent. Boom. Eventually, market is right back to being bullish environment. But if you can, let me use another example of this bullish environment. Boom. The lows are very clear here, right? There's S&T, there's a low. Boom. Higher. Very consistent. You see, support the low. Boom. Push up higher. In a bullish environment, the lows are very consistent. In a bearish environment, the highs are very consistent, meaning they get souped and they don't get contested too often. So that the market will usually not come back to it until something that generally gets met or something happens in the market, right? Which that's give me a new way of trading, my new way of determining general liquidity, new way of trading. Because on these days, if we go back in time, on these 2 specific days, I was in the market for 8 hours, right? Combined, 2 hours on a 4 hour on this day. Person can look at the market for no reason. And I'm pretty sure I took a trade on this day and I got a loss, right? But if I were to simply wait for this so they get souped, then look for a trade, guess what? Now, this is where the big move happened, right? Big move happened around here. Then the market went in our favor, right? You can see, during these 2 days, I was there for 8 hours, wasting 8 hours of my time looking at a market where there was literally no setup. But if I were just to wait for this low to get souped, boom, how come? Well, this low got souped. Why aren't you now logging up to this low? Daily ranges, right? Super low, super high, stable low, stable high. Daily ranges. That's why we wait for this low. And so this low gets souped, boom. Eventually, this low has still not been contested yet, right? So that's why these lows are very, very important lows, right? And eventually, they don't get contested. So these are all swings you can take to the upside. Or a short-term trade you can take to the upside right here. Another short-term trade you can take to the upside, right? So now, that's gonna be my new way of trading, because this saves me a lot of time. Because on these days I was in the market for this day, I was in the market on this day, no setup. This day I was in the market, no setup. This day I was in the market, it was a setup, right? This day I was in the market, no setup, no setup, no setup. This day I was in the market, setup after reaching of the high. So it's very important for us to save time, and this way it saves a lot of time because we're waiting for the daily time frame, and the best soups happen on the daily time frame above. Now let me go prove this theory correct, because this theory I found out myself, right? This theory I found out myself, but there's people who are more advanced than me that already published this way before I did, but way before I discovered it. So I just wasted, my time figuring out this myself, rather than just going back and just rather than just learn from somebody else, because somebody else taught me this, right? If you go back and somebody else right over here was the one to teach me this. Let me go get the picture. It should be right over here. Right over here. Beautiful. And then I learned this from somebody else. And before I learned it from somebody else, I literally knew this myself, because like I was the reason I was because no, I used to never use market profiles because it's very confusing to me, because in a bearish environment look for pop up highs and eventually dump into the lows. But when that happened, I was like, there's so many highs. Which high should I pick, right? Well, if you go to this picture right over here, the same picture as this, pop-up highs, down below lows into key levels. Certain times and days provide higher quality move after midnight, preferably. For me, this is a little different in my experience. Every soup is arranged. Notice the best ones are daily candles and above. Right, these specific highs, they're daily candles high right up here. They're daily candles high. Or time frame, these highs are specifically daily highs right up here. Daily high. And on this one, daily high. Daily high. Boom. Right? So they're very, very important. And like when I was looking at my market profiles, like there's so many 4 hour highs. I don't know which one to pick from. Because I was like, these highs are just dumping the price. Every time the market goes pop up this high, market just dumps. So like I want to take trades from this specific price point, right? But the problem I had was I didn't know which high. Now they solved my problem. The daily highs and above, which as a short-term trader, daily time frame is very important for us, right? As you guys know, obviously, this daily time frame is very important when trading, when being a short-term trader, because that's when we can take some long-term trades, right? So you can see, boom, reaching of the high, break with the low. Reaching of the high, break with the low. You see, like these specific price points that want to, dump as low. I was like over here, I was like, damn, market is dumping so low. I was confused, like, how can I take this move? I was there, there was a reaching of this high, and market dumped this low. I was like, I want to take these trades. You can see, reaching of the power of the high, break with the lows, very aggressively as well. And over here, he did it aggressively down here, but market never offers that setup. But I can see, reaching of the low, we're gonna shift to the upside, right? In this case, I was bullish because that's the week that set to CRT to the upside. We're gonna shift to the upside, and on this day, reaching of the high, eventually a little aggressive to the downside, but you can get the concept. I was like, I want to trade market profiles, but I'm confused which chart to pick from. And now I just found my answer is the daily highs and lows and above, which they are the best. Right? If you go back in time even more, this specific one causes big push to the upside. This specific low causes big push to the upside. This specific low causes big push to the upside. This specific low causes big push to the upside. Same thing here. Boom. This low never got contested, and eventually market this the low causes big push to the upside, right? This low again causes big push to the upside. These days I never had a setup. This low cause a big push after it's looking dispersed, cause a big push to the upside, boom. You can see these flows are very consistent. Same thing here, right? So yeah, it's gonna be a new way of trading, a new way of determining draw liquidity. This way helps me determine save time because I gotta from now forward I gotta do something else, which is very important to me as well. So yeah, so I was overall bearish on Friday. That's all the trade I had. That's how much I can talk about. We'll talk about the other days. This gonna be a weekly market recap on that. But today's just a Friday trade recap. But we had a weekly high roll back to weekly ER roll. Market first did SMT ER to I roll. Weekly I roll back to ER roll. We popped above the daily high, so I'm looking for a break below low. So right on Friday is when I use the theory. Now going to lower time frame. In this case, keep in mind I had a loss on Friday because I used the wrong time frame to execute. And on Friday, you see we had a negative profile 2, 5 inclination, 90 mid placing, 1 P expansion. We had a 4 kilos, which is 4 high, as well as we had a bearish order flow. We had daily ranges, super high, super low, stable high, stable low, premium discount when premiums were sell off, as well as that's all we had. That was enough. Going down to lower time frame. Since my rule says is a negative profile 2, I could look for an advanced entry. So I was looking for an advanced entry in the 5-minute time frame because the 8 AM candle was a specific candle. So I was looking for a advanced entry on that. Eventually went down to the 5-minute time frame. I was looking for my entry model, the got a valid high, the right model one, and I was waiting for the Richmond block to get tapped. The Richmond block got tapped. Eventually had a loss. Instantly, the market then down to the downside. So that's what happened on Friday. And the lesson number 1 is I will no longer look in the negative profile 2. I will no longer look for the advanced entry. I'll primarily stick to the 4-hour to 15-minute, 1 hour to 5-minute. The only time I look for hourly entry is when a negative situation. Otherwise, I will not be looking for hourly entry because although there's a 4-hour CFT and hourly CFT in impact, but the 4-hour CFT is a higher time frame, so it has higher power. It has a higher power, so the 5-minute time frame is going to get disrespected. So the hourly time frame is going to have a higher chance of getting disrespected, and the 4-hour time frame is going to have higher chance of getting respected because higher time from higher power. So the lesson of Friday is I will no longer look. That's lesson number 1. I will no longer look for the advanced entry where when there's a negative profile 2 and there's an 8 AM candle, right? I cannot use the 8 AM candle I cannot look for that. Whenever there's a negative profile 2, I cannot use the hourly CRT. I must primarily stick to the 4-hour CRT and a negative profile 2 and a negative profile 1 to avoid the lower time frame manipulation. Because at a 5-minute time frame, there's a lot of things happening in the 5-minute time frame. So we just go to the 15-minute time frame to avoid that noise. Right? Which you can see. I'm gonna give us the right number 1, tapped it, and eventually did it to the downside. So that is the lesson of. That's lesson number 1 of Friday, which I will no longer look for advanced entry and a negative profile 2. If there's a 4-hour CRT, I'll look for whenever there's a 4-hour and hourly. Whenever there's an hourly and 4-hour CRT, I'll switch to 4-hour CRT because it's hard to find power. I will not be looking for a 5-minute entry. I'm looking for a 15-minute entry for a 4-hour CRT, and I'll be looking for a 5-minute entry on an hourly CRT. But whenever there's a higher time frame impact, I will stick to the higher time frame. So looking for that higher time frame entries. So yeah, that's lesson number 1. Second lesson is I will no longer enter. My ways of entering the market will be a little bit different from now forward. It's going to be entering on the fair value gap above or below old highs and old lows. Let me go pop up this theory from Romeo himself, and let's see. Romeo said that fair value gap below or above old high equals high probability total soup. Quick below equals higher prices. So here's the way. You can see below this old low was a fair value gap that got tapped. So it was a very high probability total soup. You can see because high probability total soup, and that is my new entry model. So now be looking, because as you guys know, we're total soup traders. As a total soup trader, you're not meant to look for the confirmation, right? You're not supposed to wait for the confirmation. You're supposed to just enter out of the total soup without waiting for the confirmation. And a very high probability total soup would be, this thing I just showed you guys, a fair value gap above it or below an old high or old low. You can see in this case, I'll show you another example. Oh, let me take a picture of it. Right over here. Always pay attention to the highs and lows with PD array above slash below them. I will force it, they're always there. There is always a total soup. You can see above this old high, there's a fair value gap. Clean total soup. In this case, this is the daily time frame, right? A very high time frame. So yeah, let's give him a new way of entering, which is that's a high probably total soup. You can see on Friday it happened. Above this old high, it was fair value gap. The fair value gets tapped. Guess what? The fair value gap, overall delivered to the downside. In this case, I would have 9 to this trade. Why? Because the fair value gap is, in this case, if I were to enter the trade, I would have entered on the 50% mark of the fair value gap. But I would have not taken it because why? Because there's the old high is inside the fair value gap. I'm looking for the old high to be below or above the fair value gap. So in this case, I would want it, since it's a bearish scenario, I would want it to be below the, fair value gap. If the fair value gap is so big, I would enter on the 50% mark of the threshold. It's not big, then I'll enter on the start of it, put my stop loss, wherever. So yeah, that's the lesson of the second lesson, where I'll be entering. This new way of entering is going to be entering on a fair value gap above or below an old high or old low. It cannot be inside of it. I will show you guys more theory to that. I'll show you guys more reasoning to why that, because this you can still enter this trade, but this would be considered as a lower probability setup, which would not deliver. It would like low probability setup, meaning it can deliver, but it's not a high probability setup. As you guys know, we want to focus on highest probability setup. So now the second lesson, I will no longer be waiting for the model confirmation, but I do need to have the valid high, valid low. If I don't have a valid high, valid low, I'm looking for repurchase, right? Simple as that. But I don't need to wait for the model confirmation in the ratio block entry. I could just enter the fair value gap above or below at all high or all low. Let's give a new way of entering, because Romeo himself said that is a high probability total soup, and that happens a lot in the lower time frame. I'll show you guys multiple examples, which happened on Wednesday, and it happened on Thursday. So on Wednesday, below this old low, right below this old low, if you can see, our entry would have been older on here. And you probably wonder, well, if you go back over here, this is our CRT. Gotta go back to the higher time frame to measure the CRT here. Our CRT was the scandal. If we go back in time, you can see. That's why I say that that's type of entries is a low probability. Why? You can see this old low has a fair value gap, which he did not deliver, right? It's kind of suspected. So, and below this old low, there's a fair value gap. Right, so below this old low is a fair value gap, which this one delivered to the upside. You see, he got tapped, eventually delivered for a 23 RR, which was the target, was the weekly IRL, which he delivered. You see 23 RR, that could have been a beautiful trade. That's the trade number one. And this is why I said that I will not be looking for entries where if the old high or old low set up for value gap, I'm not gonna take the trade because low probability setup. I only focus on high probability setup. So the highest probability setup is gonna be a value gap above or below the old high or old low. In this case, it would have not taken that trade on Friday. So going back, and also, as I said, why? If you go back in time, below this old low is inside this value gap, which if you enter the trade there, would have been disrespected, you would have had a stop loss. So yeah, now let me pull that theory a little bit more. On the Thursday trade, Thursday would have been bearish here, but the Thursday trade I never had a setup, so it would have been chilling. But going over to the Thursday, same thing here. Below this old low, there was a fair value gap. Right? This fair value gap was the one to deliver. But right on this old low, it was a fair value gap right on the old low. So this old low was already in a fair value gap. So it's going to be considered a low probability. So you can see why the market dipped lower. So if you were to enter here once again, stop would have been right below this low, you were gonna stop out, and eventually market would have delivered. So how could you avoid that is by focusing on higher probability, where the Ferrari will be above or below the old high or old low. In this case, you can see below this old low, there was a Ferrari gap which got tapped, and you stop right below this old low, right below this Ferrari gap below the second candle, and you take it to the upside, which this one delivered beautifully as a total soup. Boom, tapped it, delivered instantly for a 5 RR. Right, so as you guys know, we're total soup traders. We're not supposed to wait for the model one confirmation, the rest block entry. You could definitely do it for a safer route, but the more, as I said, our goal is to refine and sharpen our edge, and this is what we're doing, right? This is why I'm getting to. That's why I'm changing my rules of entering, trying to, because on this trade I missed this setup. Because I was waiting for the model confirmation. I was waiting for the rest block entry to get tapped, which never got tapped, right? So this way we don't miss the setups. And we can actually participate in the moves so we don't miss it. So the lesson of that's the second lesson. It's gonna be our ways of entry. Now let me show you guys a higher time frame way, right? In this case, I already showed you guys the daily time frame, the 4-hour time frame. Let me show you guys another 4-hour time frame, right? Which happened this week above this old high. It was Ferrari gap, which this one got after the tap in the weekly IRL. Instantly delivered to the downside, so could have taken it short instantly in the higher time frame based on the higher time frame. But I would have not taken it because in the higher time frame, the only way to enter the higher time frame is based on I would in the future possibly enter shares like this on a higher time frame itself, but that would need to be waited until I get more confirmation on that, since I just need the lower time frame, because the higher time frame already have an entry, which is the active OT key level itself. But yeah, you can see this one delivered as well. 7 RR. You just say you're still been a trade up till target's met, which is always low. It's gonna be a 13 RR, right? So yeah, it happened in a higher time frame, the lower time frame. We can see, but when it happened in the lower time frame, when this old high, when you were in this old high, when this old highs instead of Ferrari gap is low probability, you can see it dig even lower, it dig even deeper to the Ferrari gap, which the RR wasn't even there. The RR is very ass in this, so I don't know, I'm taking that trade because the RR was very ass. But you can see whenever the old high or old low inside the Ferrari gap is a low probability, you can see this old low inside the Ferrari gap, so we're taking a trade. We had a stop loss that eventually market went to your way. But whenever the old high or old low is above or below the Ferrari gap, then that's when it's going to be a very high or probability. You can see outside of this old low says Ferrari gap, so if you're too long, that's Ferrari. If you were to long that, but had a stop loss. So yeah, that's the very easy way of entering the market, is waiting for a higher probability setup. So yeah, the second lesson. The third lesson is that's the lesson of Friday. It's the lesson of trade, and I took a small loss. I didn't take a big loss, by the way. I took a very small loss, and yeah, there's a new way. I have the new wave. So then my thing is, I'm gonna transition to entering higher probability setups, which is gonna be based on the daily time frames, right? So I will high likely only give you guys my foresights on the days where I'm going to participate. On the days where I'm going to participate, I will not be posting where I'm looking for the market to go to. But the lesson of Friday is multiple things. My new ways of entering the trade, my new ways of trading the market is going to be based on a daily, highs and lows, which I'm looking for a dump below daily low in a bullish environment. They're eventually going to long it up. I'm looking for a pop of daily high, then shorting it down. Bearish environment. If that does not happen, I'm not in a trade. I'm in the market. I'm not gonna be in the market until the market pops above a daily high or down below daily low. Then I'm looking to take a trade. Otherwise, I'm not looking for any trade depending on my drone liquidity, because this right here helps me first of all save time, so I can put my attention to something else and get that done, and this helps me be spot on. Like right when this gets hit, I'm straight away looking for setups, right? Rather than coming every single day, because I come here every single day. Monday I came in every day. Monday I came in the market, I had no setup, right? I stayed in the market for 6 hours. I stared at the market for 6 hours again. But the next day, 6 hours again, I didn't see enough setups, right? To the downside, the market didn't support market didn't give me any setups. So I stayed for like 12 hours in 2 days, staying just at the market for no reason, right? So that wasted a lot of time. And if I were to come here on Wednesday, stay at Wednesday, but Wednesday I had a setup, take a trade to the upside. Simple as that, right? On Friday, Thursday, I would not be in the market because market didn't, give me my setup. On Thursday, I would have been in the market because it would have been a double purge because the market pushed up the low, pushed up the high. So there have been a double purchase. So now I'll go down to the range low again. But when it went to the range low, market never, before doing so, market never gave me a setup. So I would have not taken that trade. And the market never gave me a setup because the market already got met. And on Friday, there was a setup, but the setup would have been a low probability because the old high was inside the fair value gap. But if you would just wait for the market confirmation, it would have definitely been a trade for you to take. But it was very ass, I'm not gonna lie to you guys, very shitty RR. So I'm not taking that trade anyways. So that's a lesson on Friday. Lesson number one. So again, when it was trading, it's gonna be waiting for pops above the highs and below lows on a daily time frame. Otherwise, I'm not taking a trade. I'm not going to the market. I will be monitoring the 4-hour chart. Just look for the high to 40 key level trades. Otherwise, no. Right, then eventually the next one is I will not be looking for an advanced entry in the profile 2. If it's a 4-hour CRT, I'm sticking for 50-minute entries. If it's a 4-hour CRT and an hour CRT combined, I will stick to the 4-hour CRT and look for 50-minute entries, not an hourly CRT because the 4-hour CRT is in power. Higher time from higher power. Next lesson is I will be entering my newest way of entering. As you guys know, with total subscribers, I said before, we're not meant to wait for the one-hour confirmation or any confirmation. We're supposed to just enter based on total subs. So my new way of entering the market is going to be without the confirmation. It's going to be on whenever there's a value gap above or below an old high or low. Eventually, if it's like that, I'm gonna enter the trade based on that total sub. If it's not there, I'm taking the trade. If the old high or low is had a fair value gap, I'm not gonna take the trade because it's low probability. So that's the lesson on Friday. Thank you for watching. Make sure you guys like, comment, share. Join us down below, and I'll see you guys later. Peace out.